I think the first trade is to short the hell out of Clinton with the max bet if your bankroll can afford to do it.
Warning. The political trade features probabilities and perspectives about politicians, political parties, political outcomes, and political wagering. The political trade is rated NSFP, not safe for partisans.
The number one biggest game is when they gain number fame. Like a race at the top because they wanna be boss. They don't care who they step on as long as they get along. Politicians in my eyes.
Welcome back to The Political Trade, the podcast for people with a passion for politics, probability, and profits. I'm Jeff Joseph, editorial director of Luckbox magazine, hosting the podcast where conservatives and liberals, Republicans and Democrats, partisans and wingnuts converge to make money betting on politics by trading in the prediction markets at predictit.org, the stock market for politics that trades 24/7. Joining us on the show today is Mark, a longtime prediction markets super trader, currently among the top 15 oracles on Predictit's leaderboards. Up ahead, Mark's going to reveal one of his most relied upon trading tactics, followed by several specific trades that he's wagering on in the political prediction markets today. So to get the most out of this podcast, open up predictit.org, click on the markets tab, which is top left, follow along and leave your political ideologies at the door. I'm joined, as always, by Mike Reddy. Mike is an editor at Luckbox magazine, a new prediction market trader, and the producer of The Political Trade. How are you, Mike?
I'm doing good, Jeff. And in fact, I wanted to start this episode off a little bit differently. I want to address a rumor that I've heard through the grapevine. I heard that, and you can tell me if this is true or not, you're supposed to be appearing on Hard Factor soon?
No, it's not a rumor, Mike. I think I may have mentioned that we've been talking to our friends over at Hard Factor, and of course, we featured them in Luckbox magazine in this current issue. And I guess they're returning the favor. They've invited me to guest on their upcoming segment that records tomorrow, which will be a Florida Man Friday, which is awesome because that's probably one of the most fun aspects of their show is Florida Man Friday. So I'm looking forward to it. So, what have you been doing, Mike? What markets have you been spending most of your time on lately?
I've been spending most of my time in one market in particular, and it's one that I really hope we talk to Mark about a little later on, and that is the Justin Amash market. I thought at the time that it was a sure thing. I put some money down. In fact, I put a little extra money down on this market, and it's been doing a lot of movement since then. So maybe that's something we'll get into a little later in this episode.
You mentioned sure things, and we're also going to be talking about that a little bit later too, with a new segment that we're introducing toward the end of the podcast. So we'll get into that later on. But of course, we're going to have Mark share his favorite political trades with us today. And so, Mark, are you out there?
I am. Hi, guys.
Terrific. You're joining us from San Francisco, right?
Yeah, just north of San Francisco, actually.
Well, terrific. Thanks for being on the political trade. Mark got his start in political prediction market trading back in the Iowa election markets, and we'll ask him a little bit about that. What I love about you is you're a poker player, avid sports gambler, and you've been trading heavily on Predictit since 2016. You've achieved quite a lot of notoriety as a result of your ranking in the Oracle boards as among the top 15 of all Predictit traders. Um, you confided in me when we spoke not too long ago that the early days of Predictit trading were a little rough for you. Can you tell us more about that?
Yeah, so I actually created a big bankroll originally participating in the DraftKings and FanDuel doing DFS sports. And I've always been into politics, so I thought I would try to carry over some of that luck and insight into politics and put a few grand down into Predictit around December 2015, January 2016. And within the first couple of months, I think by mid-March, I was down over $3,500. So it was a rough start.
Yeah, that is a rough start right out of the gate. So, what were the lessons that you took away from that period, and how did you get yourself back on the road of recovery?
I think it was just uh, I initially came into it just thinking with my biases, and that's one of the biggest no-nos I think of Predictit or any gambling, whether it's sports or even poker. I put my money where I wanted to see someone win, especially went really hard in Iowa on the wrong side, and just didn't really stop and think objectively about my wagers, and instead just kind of went with my gut and my bias.
We ask all of our guests before they come on the show, and most people don't know this because we've never brought it up before, but we ask them to take the world's smallest political quiz. And that's a very searchable thing. Any listener can pull up the world's smallest political quiz. It's about 10 questions, takes all of a minute to answer. And what it does is more or less put you in a bucket politically, either left or right or libertarian or centrist. You, I will share, and we've never shared the results before, but I will share your results because you are our first guest that actually fell in the centrist category. Not to, not to expose who you are, but we always ask the question because we want to get an understanding of what the political perspective was of our guests on, and see if in any way it led them to different biases in their discussion with us or in their selection of market opportunities. Yet you just alluded to the fact that in your early days trading, you were a victim of your political bias, even though what we see is that you are a centrist. How did you convert from betting with your heart to betting with your head?
Well, I think the first thing was I was tired of losing money, and I had to stop and figure out why I was losing money if I wanted to continue playing Predict It. Um, I had come off some wild success playing poker and with DFS, and I think I just let that get to my head. But when I started down a road of 3 months of losses, I thought I'm doing something wrong. I'm not making intelligent decisions. Why is that? And I think the first step of that process was just taking a step back and saying and asking myself, why did I make that wager? Or why did I bet that way? Or why did I hold my shares beyond a certain point or whatever? And just start to question what I was doing. Once you start to question what you're doing, you can kind of try to figure out what you did wrong. So I think that's the first step.
And I know the second step is something you're going to share with us in the upcoming tactics section, whereas you really started adopting some of the principles that professional poker players use at the table and started applying that to your prediction market trading. So I know we'll get to that shortly, but let's step back and talk about what Mike brought up at the outset. We have some third-party candidates that are looking at the perimeter of this race right now. Both Justin Amash and Jesse Ventura have indicated an interest in joining the political race. Let's start with Justin Amash. We talked about him last week. Of course, he's the U.S. representative of Michigan's 3rd congressional district. He's been in office since 2011 and originally a member of the Republican Party, but Amash was highly critical of Trump and became an independent last year in 2019, and then has since joined the Libertarian Party not too long ago this year. He's currently trading at about 86 cents in the market on Predicted. Will he join the race? So he's at 86 cents. It's down about 4 cents. It seems like a sure thing at first, which Mike was alluding to, and I think Mike considered it to be somewhat of a lock. What's your assessment of that market?
Well, I think this is a great starting example for discussing some of the issues with someone just starting on Predict It. So you read the title of that market, will Justin Amash file the run for president before June 1? You look at his announcement and you just kind of think from a layman's perspective, well, holy shit, the guy just declared he's running, he's doing interviews, he's raising money, I'm sure he's spending money. This is a yes. So but it's one of those things where if you step back and drill into it, read the rules, look at some of the idiosyncrasies, you realize it's slipping for a reason. And that's because he hasn't technically filed to run for president, despite all of the other objective data points which might suggest otherwise.
Is this currently in your portfolio? Is this a trade you have a position in right now?
So there have actually been many markets that are very similar to this, where that little rule idiosyncrasy of having to file a statement of organization or candidacy with the FEC is what triggers a yes resolution. So we've had this before, and I was prepared for it here and in the Jesse Ventura market, which we'll get into, I'm sure. So I had a small no position. I've presently flipped out of that. I do think ultimately he's going to file within the next week and a half, couple of weeks. So right now I'm just kind of sitting back waiting to jump into a potential yes position.
Well, let's move on. Let's move on to Jesse the Body Ventura, as long as we're speaking about third-party candidates. He is also threatened to run for office. As you recall, he was the 38th governor of Minnesota back at the turn of the century, 1999 to 2003. He was the first and only candidate of the Reform Party to win a major government position. And of course, Jesse was a WWE wrestler and a member of the U.S. Navy underwater demolition team during the Vietnam War. And just recently, he sat on a park bench a couple days ago and joined up with the Green Party. The market on predicted is, will Ventura run for president before 6/1? It's currently trading at 11 cents for a yes, and it's been all over the place the last week. Is this a market you've been following?
I have indeed been following this one. This has been a bit of a fun one. I haven't profited as much as I'd like, but it's been a roller coaster, and I think it's one of those markets that actually underscores one of my trading tenets, which is to do your best and try to find some kind of positive expected value in your trades. So when this market first opened, I think the market had put yes for Jesse to declare and run by June 1, somewhere around 20. It ranged and fluctuated between 23 to 30 cents, I think, over the first couple of days. And I personally felt like yes was underpriced. I felt like he seemed fairly committed to looking into it and was starting the process. And that yes probably should have been trading closer to 45 to 50. Maybe that's a little optimistic, but certainly yes was underpriced. So I did buy some shares. I ended up selling some over the weekend before they really flipped hard, but I kept some and made a little bit of a profit. But it was pretty clear to me that from the outset, yes was underpriced, and that there was an opportunity to flip upwards at some point.
Well, it's been a huge swing. He traded as high as 88 cents. So there was a lot of opportunity for, short-term speculation, which it sounds like what you engaged in. Mike found a clip from Jesse only a year ago questioning if he really wanted to commit to another run.
I've already given up 14 years of my life. 6 years in the United States Navy, 4 years as a mayor, 4 years as a governor. That's 14 years. Do I want to go 18? I don't know. And that's the dilemma for me.
A lot of optimism there, huh?
I think that perfectly encapsulates why Jesse hitting 88 cents was absurd on the news that he was likely to run. So so basically the insiders started to come out on Twitter, and it was pretty obvious that yes was favored. Jesse was going to declare, and yes just skyrocketed into the high 80s. And the problem with that was, even though while yes was probably a pretty large favorite, you had a bit of the Justin Amash problem, which is that no still had some inherent value because Jesse might not file a statement of candidacy in time to meet the technical requirements for a yes expiration. And two, I mean, the guy's a little wishy-washy. Did he really want to? Was it a fishing expedition? Was he just testing the waters? It wasn't clear, but people definitely took yes way too high, despite those potential two issues: his wishy-washiness and also the technical requirement. And I actually was able to get a few no on the other side, just because I thought they had a lot of value, at least to flip upwards.
Well, we should note that you are a full-time practicing attorney, yet you still managed to be in the top 15 on Predicted. When we spoke offline, you mentioned that as much as 10% of your income, despite being a full-time practicing attorney, has come from your political prediction market trading over the past, going way back to the Iowa election markets. So it's nice that you find time. Well, maybe you'll like this next topic because it moves us into the legal realm a little bit. There was some big news out of New York yesterday. A federal judge ruled on Tuesday that New York must hold a Democratic presidential primary. It's an interesting market because it relates to one of the markets on Predict It.
Presidential primaries back on for June 23rd thanks to a ruling from a federal judge. It had been canceled last week by the Board of Elections over coronavirus concerns, and former Vice President Joe Biden was declared the winner. However, former candidate Andrew Yang sued, and today the judge ruled that the cancellation is unconstitutional.
So an interesting market, because just a couple of days ago in the predicted market, which is explicitly who will win the 2020 New York Democratic primary, Joe Biden closed at 9 cents on Tuesday, but that all changed when this news broke out. Have you been tracking that market?
I have. I've been intimately following this market. Well, actually, maybe not as intimately as I should have been, because I missed the big flip there based on Andrew Yang's lawsuit. But I've been following that market since it became likely for the New York Board of Elections to cancel the primary, through all the flips and then through the recent one. And it's been another roller coaster.
Well, once that news broke about the federal judge's ruling, Biden's price just took off. It, even though it opened at 9 cents on Tuesday, it hit a high of 87 cents with nearly 100,000 shares traded that day alone. And right now, the New York Board of Elections said the board was preparing an appeal. You mentioned following the news, and I know it's one of the tactics, well, actually one of the tools that you wanted to share with us, that you believe it's imperative for every active trader on Predict It to rely on TweetDeck to serve up news through Twitter. Can you say a little bit more about that, and how often are you engaging with the TweetDeck platform as the primary source of your news?
Yeah, so I've got three monitors in my office. I've got one of them dedicated solely to Predict It. I keep up TweetDeck with all the tags to try to get the latest breaking news. I actually had a TweetDeck set up for the potential likelihood of Bernie suing the BOE to overturn their decision. That's what I thought. That's where I initially had thought the value in Biden yes shares had lied. But yeah, TweetDeck is a great resource because nowadays all the breaking news is coming from journalists on Twitter. And it's a great way to not just get the breaking news, but to help adjust your positions, stay informed, just kind of understand the politics of the moment and everything else. So I don't know how you would trade without that kind of breaking news and information.
So TweetDeck, you don't have to buy it because it's free in its simplest and basic form, but a good source for curating breaking news. All right, well, thank you, Mark. As you know, we're going to come back in a short minute, but each episode of The Political Trade, we ask our expert super traders to share a trading tactic that they rely upon for their chart-topping returns. Mark's going to come back with us right after a quick break, and we're going to get into his tactic right after this. All right, we're back with a tactics segment of The Political Trade. Mark, take us to school. I understand you're going to talk to us about expected value.
Yeah, so before I jump into that, I just want to give a quick shout out to reading the fucking rules. No one does that enough. It's the first thing you should do before you jump into any market, and I can just kind of set that aside now and get into my general kind of gambling strategy. So being a poker player, the one way I was able to adjust my early losses on Predict It was, again, stepping back, asking the question, why am I making this wager, or why do I want to, and sifting through the bias and instead trying to look at it through an objective lens. And I think that objective lens for me has come from trying to find a positive expected value. And in poker, we just call it EV plus or positive EV. A good example of that might be kind of talking about a cash game in a ring of poker when you're trying to calculate the pot odds, which is just kind of the layman's way to put that is to determine whether or not making a call in a bet you're facing, determining whether or not that call is mathematically correct. So to kind of give a hypothetical of that, if the turn card has come in a hand of no limit hold'em, and you have a draw to the nut flush, say you have approximately 25% chance of hitting the nut flush and winning the hand on the river, And the pot right now is a size of, say, $500. Your opponent makes a small bet of $100. So the pot now is $600, and you have to call $100 to win that pot of $600. So if you're 25, so you're sitting there thinking, okay, is this call going to be profitable? $100 to win $600. Well, so if you have to call $100 to win $600, then obviously your odds are better than 25% to win that pot.
Sure, it's an essential calculation. It's one of the reasons we love talking to poker players. So, just to recap that, you've got a 25% probability of winning the hand based on counting outs and based on counting the pot odds. There's 500 in, and you have to call for $100. And the question is, should I do it? So you take the 500 plus the 100, and that comes out to 600. And 25% of 600 then would be 150. You subtract the $100 bet, and that 150 minus 100 would equal 50. And that means the expected value is positive $50. So EV plus means positive expected value. And whenever you apply that scenario of simply adding what's in the pot plus the bet you would have to make times the percent outcome, 25% times 600, 150, subtract the bet, $100, gives you an expected value of $50. And that means, yes, you take this bet. Now, the interesting thing about expected value is it requires repetition. You have to repeat that opportunity set many, many times, because in poker, you might go on and lose that hand. But if you're applying that approach religiously, every time you run into a similar calculation, over time you would win because it had a positive expected value. So one of the dissonances with expected value and applying it to political prediction markets is that you can sit down and play poker for 6 hours, and over time, if you have that discipline, things should work in your favor. Have you found that relates well to the prediction markets, applying that same approach, that same discipline?
I think it does relate well for a couple of reasons. And the first is that it helps you to try and look at things more objectively. Now, obviously, it's a little more amorphous with, kind of prop bets and outcomes like elections, where you're not going to ever have a mathematical certainty. So it's a little more mushy, but it still helps you step back, set aside your bias, and try to look at things more objectively. And secondly, once you start to make that mathematical calculation, so let's try to use it as an example to really lay it out. So in the Jesse Ventura run market, when I was buying shares at 14 cents and 15 cents, even though it seemed very likely that he was going to win, I took what I did to make it mathematical was I looked at the likelihood that the market was currently saying for Justin Amash that he wouldn't file in time, and knew that that likelihood would equally apply to Ventura, but probably more so since he's already late to the game. He would have been at least a week later in publicly declaring than Amash. So the odds that he wouldn't file in time would be even higher than Amash. So I took that, which was around 10 to 12%, the market was saying, and knew that at an absolute bare minimum, Jesse Ventura should not be above Justin Amash. So that was a profitable play just on that data point alone. And then you start to add in the likelihood that Ventura just would change his mind. He has already in his past been wishy-washy on whether or not he was going to run, and whether or not this was more just him testing the waters to see if he was up for it. And you add that, you say maybe another 10 to 15%, just kind of roughly, then at that value, yes, shouldn't be at the absolute highest above 75, meaning that no shares below 25 cents should be generally profitable or have a positive expected value.
And what you've just identified is addressed the question as to how a strategy that requires a large data set to offset what's called the negative variance, the instances when you make the right positive expected value play, but still lose the pot or still lose the bet. That's inevitable, negative variance, but you need a large data set of repetition to overcome that over time. And you've just given the framework as to how to apply that by benchmarking the expected value in the market you're evaluating against the relative value that's obtainable in another market. So that really is the application. The phrase expected value, I think, confuses some people. it's just a synonym for mean value, which in the long run is what happens after many repeats of a large sample size. So this is an application then you use in every trade that you make on Predicted?
I would say, yeah, pretty much every trade. I start by saying, why am I making this bet? And the more you start to apply that foundation to your wagers, I think the easier it is to do. I can be making decisions in some markets within 10 to 15 seconds as to whether or not I think a trade is profitable. And that just comes from years of repetition and years of trying to apply that way of thinking. And as you said earlier, 75% of the time when you make that call in poker, you're going to lose that hand. And one of the ways you try to avoid getting sucked into that mindset that you're going to lose most of the time is you can't be results oriented. If you're making a profitable bet, it's profitable regardless of whether or not you lose 75% of the time.
And that's great advice, but that is only applicable advice if you're using proper bankroll management. So, what would be a quick rule of thumb that you might advise newer traders on as to what size wager should be applied to any given market relative to your overall portfolio size or your investment size?
Yeah, you're absolutely right. Just like poker, one of the key fundamental issues in being profitable and doing well is good bankroll management. And that applies just as much to predicted as to sports betting or poker. So I think you have to write your own rules and look to see what some of the veteran players are doing or see what people are doing in general in poker. And before you make your first wager, have an idea of this is how much my bankroll is. I'm only going to use X percentage per market, and I'm not going to be overly aggressive and do more than that at first, and set kind of benchmarks that every 30 days or every 2 months, I'm going to reevaluate and see how those bets worked, how my initial bankroll management helped with my maintaining my bankroll. And there are a lot of ways you can kind of gauge that. And I think that this first starting point is you start with $5,000 on Predict It, that I wouldn't probably put more than 10 to 12% of that into any one market. And then you should be adjusting that according to the type of market as well. For example, I don't know if I would, on day one of Predict It with a 5K bankroll, put $500 in a tweet market, even though that's 10%. I think you're just asking to flush that money down the toilet. So it varies on a per market basis as well.
And you just struck on a very sensitive topic for me right now, mentioning tweet markets. So with that, we're going to use it as a segue. We're going to move from tweet markets to something a little bit more substantive. How to apply expected value. As we move to our next segment, we're going to ask you for your top trades on Predicted right now. So we'll be right back after a quick break. But first,
want a little more luck in your life? Get Luckbox, the control freak's guide to life, money, and probability. Named the best new magazine of 2019. Luckbox is a must-read for side hustlers, gamblers, entrepreneurs, and active investors. Each issue features best bets from prediction market experts, as well as timely sports wagering, stocks, options, futures, and cryptocurrency trading ideas. You can buy Luckbox on newsstands, but with this special offer, listeners of The Political Trade can receive a 10-issue digital subscription absolutely free. Just visit getluckbox.com to receive the award-winning magazine right in your inbox. Don't rely on luck. Get Luckbox for free today. Learn more at getluckbox.com.
welcome back to The Political Trade. We're on the line with Mark, and Mark is one of the super traders, one of the Oracle's top 15 traders on the Predicted leaderboards, and we're going to jump right into your top trades on Predicted right now. Mark, what's the first market that we should pull up?
So I know a lot of other veteran players disagree with me on this wager. I think they had a bunch of them had just chimed in recently on another podcast, or there was a Zoom call, and that's the market on whether or not Trump will win the popular vote this November. And it seemed like three of the four traders that were asked about it thought that Trump's odds of winning the popular vote were better than the market, which was somewhere around 30 to 33%, about 1/3 chance the last time I looked at it.
today trading at 29 cents for a yes today.
Yeah, so it has dropped a few percent since last week, but I actually think the odds of Trump winning the popular vote are drastically lower than what some of my fellow traders who are veterans have put it at, and even lower than what the market is putting it at. I don't think Trump has more than 5 to 8% chance of winning the popular vote. I think that's a great market to purchase no shares, and I have some myself.
So the market, will Donald Trump win the popular vote in 2020? The yes is currently trading at 29 cents, and you put the probability in the 5 to 8 cent range, which of course implies a high expected value on this trade. As a reference, of course, back in 2016, Trump won or lost the popular vote nationwide to Hillary Clinton by about 3 million votes. It was about 66 million to 63 million. And you expect that we'll see the same again in the upcoming general election.
Yeah, so I think right now PredictIt says there's only a 50% chance only, but a 50% chance that Donald Trump will win the presidency at all, which is based on the Electoral College. There's no chance he's going to win the popular vote and not win EC. If there's any chance whatsoever of him winning pop vote, he has to have EC. That's just a cold hard reality. So if you start at that baseline, again, just looking at it mathematically, if he's not going to win the popular vote, if he doesn't win EC, then you can just assume a baseline of 50% to win the popular vote if he could somehow manage to do that 100% of the time, to do both. And clearly he's not going to win the popular vote 100% of the time when he does EC, so you can start to degrade that position from there. And the market's basically saying somewhere around, I don't know, I haven't done the math, but 70 or 80% of the time that he wins the Electoral College, he's also going to win the popular vote. And that's just massively optimistic. I think I started to look at some of the data over the last couple of weeks in terms of some of the voter registration data that's being published and that's ongoing. And it looks like the rate at which Democrats are starting to register is catching up, and they're beating their 2016 margins for registration by quite a bit. So if we start from 2016 and we say he lost by a significant margin, I don't see how he's going to gain when Democrats are doing better registering than they were in 2016. I think he might have a harder time of winning the popular vote. And this all just assumes that he actually is 50% to win the EC, and I think that's also optimistic.
So the related market you're referring to, the EC market, is will the winner of the popular vote also win the Electoral College? The latest price on that is 65 cents as a yes vote. So there seems to be a strong disconnect from the 30% vote for Trump to win the popular vote if the winner of the popular vote will also win the Electoral College at 65 cents.
Yep, that's an astute observation. I think if you start with a couple of assumptions which are safe to make, you can see why those two markets seem to be disconnected. I think essentially, if you assume that if Biden wins the EC, he's probably around 100% of the time going to also win the pop vote. Maybe shave off a few percentage for variance, but it's very unlikely that a Biden victory wouldn't result in him winning both. And that's not true for Trump. And when you start to do the math, I don't see how those two markets make sense. Basically, that market is putting Trump's popular vote win at somewhere around a little less than 20%, while the just straight will he win pop vote market is around 30%. So there is a disconnect. And I think there's a potential arbitrage to be made for the types of bettors that look to those arbitrage wagers.
Which brings us logically to the next market that you asked us to pull up, which is who will win the 2020 U.S. presidential election. And of course, Trump is at 50 cents right now. About 2 months ago, it was as high as 57 cents. It got down to about 46 cents. And right now, Trump is trading at 50 cents to win the 2020 election. Biden is at 44 cents, and Hillary Clinton is at 6 cents. So I know this is one of the markets you wanted to discuss. What's the trade here?
I think the first trade is to short the hell out of Clinton with the max bet if your bankroll can afford to do it. Hillary Clinton's not going to win. she's not going to run. That's a pipe dream. It's a bit of a meme. So I think if you have the bankroll, just maxing no is a pretty safe bet. But
So about a 94 cent no from now till November yields about a 5% return on the trade, maybe 10% annualized. Not a bad return if you have the money for it, right?
yep, exactly. Yeah, taking into account the VIG or predicted cut, that's profitable all day, every day. Um, Turning to the Biden-Trump showdown, which is what we're all here for, I think the markets wisely started to reduce Trump's likelihood of an EC victory, just based on how the economy has started to degrade, and that certainly cuts against Trump. His handling of the COVID-19 pandemic has, in the eye of the public, according to the polls, he was initially, the way he was responding was around 48 to 50% favorable, maybe a little higher, and that's degraded to the low 40s now. So clearly the public is starting to shift against him in terms of how they view, how they approve of how he's doing. And so his odds have decreased. And I do think 50% remains optimistic. I do know, and I can kind of give a shout out to another bettor, which is Doma, made a significant wager outside of predicted to bet against Trump. So I just want to give him props for having the balls to make such a sizable wager, where the market clearly thinks both of us are wrong and that Trump is around 50%.
But at 44 cents, you see high expected value.
Yep, I think a bet on Biden right now should be positive EV. He's probably closer to, I think it's, I think Trump isn't more than 40% to win EC right now. I think things are degrading for him, and we'll see where they are in the fall. But if the election were held today, his odds would probably be even lower than that, maybe not more than 30% chance to win.
And no doubt one of the determining factors is going to be the ongoing development of the COVID pandemic crisis, and of course, the extent to which there's some economic recovery, which brings us to the third market that you want to speak to, which is, will the US economy hit 5% plus GDP growth rate by the end of 2020? So currently in the market, will the US economy hit 5% plus GDP growth rate by the end of 2020? A yes is 75 cents. Where do you fall in this market?
This cuts right back to my point on trying to find that positive expected value. So I think yes is absolutely favored. I wouldn't put it at more than probably around 60 to 65%. Now, mathematically, trying to get to those numbers is a little harder than like the Jesse Ventura market, where I had a baseline market to look at. But I think here my thinking is basically that there's just so much variance, all related to just nobody knows what things are going to look like in the fall. The second quarter is probably going to be abysmal, so there is a high chance that the economy will be able to rebound from those bottom of the barrel numbers and hit 5%. But say halfway through the third quarter, we have another outbreak, or the virus has mutated, or we weren't social distancing enough, we opened up too soon, yada, yada, yada. All of those things add to variance and to a potential likelihood that it won't necessarily resolve yes. So I do think no in the mid to low 20s is a possible EV plus wager, and I'm starting to accumulate shares. I already have some.
And of course, the outcome here is going to be somewhat predicated on whether or not we have a U-shape or V-shape recovery. Because if there is a V-shaped rebound, then the prospect for 5% growth in the fourth quarter is far more likely. But as you said, if problems seem to be severe to the economy as they appear to be at this point, or any second wave that's material by any means in terms of infections, that V-shaped recovery is not very likely.
I don't know if I would say not very likely, but certainly it is impaired enough that it's not 75% likely in my view. It's one of those things where it's probably the favorite and you're going to lose based on it being the favorite most of the time, but you can still make a positive EV bet despite being the dog.
And that's where the discipline of using expected value comes in. You have to follow the discipline and take advantage of expanding that data set to make it profitable in the long run and offset that negative variance. So I love the fact that you are consistent and certainly betting with your head and not with your heart. So that's an application of expected value to three different markets. Those are certainly some great trading ideas. So thank you. And of course, for our listeners, to speak of trading, if you're not already trading on Predictit, you are in luck. You can take advantage of the trades that Mark just shared with us by going to predictit.org/promo/TPT20. Sign up, deposit $20, and we'll match the first $20 that you deposited. Deposit $20, you'll have 40 to trade with. It's that simple to sign up and trade along. So we're going to take a quick break right now, but when we come back, we're going to share a new segment, this week's Luckbox Lockbox. So we'll be right back. Okay, we're back, and we're changing up our Luckbox of the Week segment that typically ends our shows. This time we're featuring something new. It's called the Luckbox Lockbox. And as you know, Luckbox magazine is our publishing platform. We always look at the prediction markets in every issue, and we often refer to the Luckbox of the Week. But there's also something called the Lockbox, and a Lockbox is a sure thing. And Predictit, we see these markets all the time. And obviously, we can all take the disclosure and the phrase sure thing with a grain of salt. But what we're basically looking at is the highest probability outcomes of some sort of meaningful return. And we asked Mark for his ideas. And Mark, you served up three different ideas that all qualify as lockbox trades. You want to run through those for us?
Yeah, so we're talking about basically the mutual funds of Predictit. Low risk, low return, but significant enough that if you have the bankroll, you should be maxing these contracts to collect your 3, 4, 5% return. So you basically have your gauntlet of will Hillary run by X date? I mentioned the earlier one, which is will Hillary win the Democratic nomination, or will Hillary win the presidency? Max all of those. Those are all, I have to think, effectively free money. And the other one, which we just started to get, is the will Biden drop? And the one we just got is will Biden drop by June 1? If you want a low risk proposition, do it, because these are heavily biased on the wrong side.
So the second market, the Biden, you mentioned the Hillary markets first, and will Biden drop out before 6/1? It's currently a no at 96 cents, which you're calling a lockbox trade. And 96 cents resolving at $1 in November would be about 4% annualized, because that's about 6 months out. That's about an 8% return, which is certainly a nice return for what is a extremely high probability, if not a sure thing outcome. So that's also on the Biden dropout market. You mentioned one more. It was who will win the 2020 Democratic presidential nomination. And that's where Joe Biden is currently sitting at an 80-cent yes.
Yeah, it's the will Tara Reade's complaints start to generate some substance and force him to drop out market, or the will Sleepy Joe leave this earth within the next few months market? I mean, it's whatever you want to call it, but it's not 15% likely to happen. There's some probability you could assign to it being yes, but it's very, very low. And the market is heavily biased against it.
Yeah, 80 cents resolving with a 20 cent profit. That's a really nice annualized return for extremely high probability outcome. So that's three different lockbox trades, all of which make a lot of sense. We won't include either the independent runs of Jesse Ventura or Justin Amash into those categories. Those seem to be up in the air, and we're going to come back and hopefully have you back on the show in the future to particularly before the general elections coming up in the fall, to kind of resolve some of this and take a look back at some of the lockbox trades you identified. But we wanted to thank you, Mark. We've been looking forward to having you on for quite a long time, because invariably you are one of the respected elite traders on the Predictit platform that everyone has a high regard for. You share your knowledge among all the traders on a regular basis, and that's why we continue to hear so many good things about you. So thank you for joining us, and we look forward to having you back.
I appreciate it, Jeff. Thank you, and thanks to Mike as well.
Thanks for coming on the show. And thanks for tuning in to The Political Trade. Be sure to subscribe to the show wherever you listen to podcasts so you can be the first to catch any trends, tactics, trades that our Super Trader guests share. This is Jeff Joseph.
And I'm Mike Reddy.
Remember to wash your hands, social distance, stay healthy, trade a little bit unpredicted, and join us next time on The Political Trade.